Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Wednesday, August 17th. Stocks are modestly higher in early trading. Investors are having a relatively mild reaction to the latest inflation data, and it seems like things are getting back to their normal subdued August pace after one of the most volatile weeks in Wall Street history last week. However, this morning's report on producer prices is a bit of a surprise. Overall, prices at the wholesale level rose 0.2%. That was slightly higher than forecast, as a decline in energy costs didn't immediately filter through to the rest of the economy. And excluding volatile energy and food prices, the core PPI jumped 0.4%. That was double the pace economists expected, and the biggest increase since January. However, a reading of intermediate prices within the report, which the Federal Reserve watches closely for signs of inflation, advanced at its slowest pace since September. That shows that despite rising commodity costs, companies have had trouble passing along those higher prices. We'll get a reading of July consumer prices tomorrow.
Outside the stock market, other assets aren't having much of a reaction to the data. Gold is holding steady just under $1,790 an ounce, and crude oil is holding on to its earlier gains, now trading back above $88 a barrel. Meanwhile, the dollar is losing ground against most of its major rivals, including the euro. Yesterday, the euro seesawed amid disappointment over the outcome of a meeting between German Chancellor Angela Merkel and French President Nicolas Sarkozy. They pledged to bolster the governance of the European Union and proposed a new council to defend the euro. But investors were hoping to see more concrete measures to tackle the region's sovereign debt crisis, including bonds backed by the full eurozone. The two leaders argued that would not resolve Europe's problems or restore confidence. Elsewhere in the currency markets, Switzerland's central bank took even more measures to devalue the Swiss franc, saying it remains massively overvalued. Policymakers boosted liquidity in the money market, but stopped short of taking more drastic measures like pegging the Swiss franc to the euro.
On the corporate front, the most movement is likely to come from the technology and retail sectors. Let's begin with tech and the 6% decline in shares of Dell. After yesterday's closing bell, the PC maker topped estimates with sharply higher second quarter profit. But the company cut its full-year sales outlook as it focuses on higher margin businesses and braces for what it called an uncertain demand environment. Dell's revenue forecast for the current quarter also fell short of expectations. But one of the day's biggest stock winners is Eastman Kodak, up more than 12% right now. The jump comes after a report by MDB Capital Group saying that Kodak's digital imaging patents may be worth $3 billion, which would be more than 5 times the value of its business.
We're also seeing some strength from the retail sector this morning. Target is jumping 5% after its quarterly profit topped estimates. The second largest U.S. discounter, behind Walmart, also saw solid sales and boosted its earnings forecast for the current quarter. Meanwhile, shares of Staples are surging more than 6% after it posted a 36% increase in second quarter net income. The office products retailer also raised its outlook above analyst estimates. That's the latest from Weiss Research. Have a great trading day.